Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy is the best way for you to grow your wealth. Hey, I'm your host, Brett Swartz. In each episode, I am joined by some of the top financial advisors, real estate experts, and passive income wealth advisors in the world, where they provide their deal stories, inspiration, wisdom, so that together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He is a man on a mission to help you think differently about your money, your economy, and your future. After graduating with 6 figures of student loan debt and discovering a way to turn his debt into real wealth as he watched everybody lose their retirement savings and home equity in the 2008 crash, he knew that he needed to find a more predictable way to meet his financial objectives and those of his clients. He is a certified financial planner by trade, a 2-time #1 best-selling author, and the owner of Lick Growth Financial Services, a financial firm in Chicago. Over the years, he has helped hundreds of clients take back control of their financial future and build their businesses with proven, tax-efficient financial solutions. He specializes in building custom-tailored financial strategies that are unknown to typical stock jockeys, attorneys, or other financial gurus. I think we're going to get along great because that is a lot about what I'm about too. So please welcome to the show with me, Mark Willis. Mark, hey, how you doing?
Hey, great, Brent. Thanks for having me on the show.
Hey, excited to have you. And would you start by giving our listeners a bit about your background and your current focus?
Okay. Well, I am a post-recession planner 2 times now, if you count this recession. We'll call the last one the less great recession, I suppose, if what we're in now is the greater recession, whatever we want to call it. But it was sort of like being dropped into the front lines of a war. We were working with a number of clients, investments, tax preparation strategies. I was working for a CPA, nationally recognized. She was great at what she did. But Brett, I heard her make the call, the call, where she says, hey, I'm sorry, Mr. Client, but I just lost you half your life savings and you're 63 years old and you can't retire. That was a nightmare. And fast forward 10, 11 years, I'm walking through the grocery store with my daughter, 4-year-old daughter, and I'm watching people pull stuff off the shelves and toilet paper and, full shopping carts full of wine. And I'm like, wow, the party's at their house. That's awesome. But, the point is, we don't know what we don't know. And for twice now, since I've been in the industry, and 3 times since the start of the millennium, we've seen the stock market pull the rug out from underneath us. And so my background, my journey has been, I guess you could say, marked by these major pivotal moments where people all of a sudden realize, it's like if you've ever felt the feeling of an earthquake, where all of a sudden you just realize, if you've ever been in an earthquake, you know what I'm talking about. Or all of a sudden the ground underneath you, just all of a sudden you don't feel as sure of yourself or anything ever again, really, for a long time after that earthquake ends. And it's, I think, a similar feeling for folks as they're tunneling through this Corona chaos tunnel. Where will we be in 3 months, 6 months? It's very difficult to know. So part of our job, part of our strategy at our firm is to help people achieve their financial goals without taking a bunch of unnecessary risks, and to be ready to pandemic proof their money for the next time this happens, whatever it might look like.
Wow, so well said, and so rich. And I remember those days. Likewise, I had clients who lost everything, right, in the 2008 crash because they had overpaid for properties and thinking that the 1031 exchange was their only option. And they'd worked 20, 30, 40 years, and then all of a sudden the debt comes due, and rents have dropped, and they can't make payments, and they get foreclosed on. Right? And some barely survived and went through a ton of stress and was able to claw back out, but some of them lost, half or all. Which is which highlights the importance of diversification, which we're going to dive into on the full interview. But in the meantime, Mark, let's focus a little bit on our podcast subject here, which is capital gains tax deferral. So I'm curious, what's the biggest frustration you've had when it comes to, or a client, or the CPAs you've worked with, when it comes to a tax deferral strategy for highly appreciated assets?
Well, the biggest frustration. There are many, and you guys have some great solutions that you offer your clients. I'll give two very quick stories. One is a gentleman who is concerned. He has not graduated yet, but his concern is all of his real estate is going to be taxed, and he's going to have to start selling some of those assets to his future heirs, his wife, and specifically his children. And he's got the problem of deferral. I sort of say deferral, can be a problem if you all of a sudden get slammed with all of those gains all at once. And the estate tax, for example, comes due 6 months after we pass away, and who knows who is going to be in office, and who knows what the law will be when that day comes. No one has the ultimate day of when we're going to pass away, nor what the estate tax will be at that point. So when it comes to capital gains tax, however, a lot of our clients are fully depreciating all of their real estate now, and they're continuing to take that rental income now. And then as capital gains may, be looking a lot more like income tax rates in the future, they're going to have all of their property fully depreciated, and they're going to have to start taking that rent check as full income. No ways to avoid that rent check income when tax rates go up, and when capital gains rates may even be absorbed into the income tax system. Just depends on who's in office, who's running Congress at the time, and how. It really doesn't matter which party has control. What matters is math. Math is the four-letter word that's running up against our tax system, where most people I talk to, most economists I talk to, say tax rates are going to have to go up and way up. In fact, a former comptroller of the U.S. estimates it's going to have to double. The tax rates will have to double. So if that's not a frustration, I don't know what is. Can you imagine paying twice as many taxes as you're paying today? And here we are. We've got some great solutions on your show, Brent. So I'm looking forward to being in the conversation.
Absolutely, Mark. And so much wisdom there. And I want to unpack a little bit of that for our listeners, especially for the estate tax, because it gets missed a lot. A lot of folks confuse capital gains tax on the stepped up basis with the estate tax, which is different, right? And just like you said, there's a lot of folks who are ultra high net worth who are above either the 23 million for married, or about 13 million single as it stands for today. Those are the exemptions, but anything above and beyond that's going to be hit with a 40% estate tax. And you're right, within 6 months after they graduate, they have to sell that, and their kids may not be prepared for that. The market may not be opportune time, right? Values could be down, but that tax is going to be triggered. Now, those in 2025 are set to expire, and they're probably going to cut down in half, right? Mm-hmm. But who even knows by the time it goes, because you're right, there's 25 trillion now or so in debt for the U.S. government, and they're looking ways to either take away the stepped up basis or limit the 1031 exchange or do away with these exemptions, right, for estate tax. Yep. And it's brutal. So if you're not prepared, you don't have a plan, you're not on the cutting edge, you're looking at a huge wealth being depleted to a government. Well, let's face it, will waste it away very, very quickly. So that being said, thank you for sharing that. And yeah, we do have a solution for that. It's called the Deferred Sales Trust, and it's really nice. You can move all of your funds outside of your taxable estate in one single transaction. So literally, if you had a $52 million estate, and let's say the first $22 million was exempt or so, you sold a $30 million asset today, you can move it all outside your taxable estate, one transaction, one deal. Now, we have had clients who come to us and go like, we've never heard of this before. We're usually doing like these gifting, but we run out of gifting amounts and amounts per year, and we can't get it out fast enough. And so we think we have what we think is the best solution for that. But that being said, go to capitalgainstaxsolutions.com to learn more about that. That being said, if folks want to get we're going to do a full interview here in a minute that's going to be launched here in the future. So if you're listening to this and you're interested in learning more about Mark, where could they find you?
Go to notyouraverageFinancialPodcast.com, and you can hear more episodes right away. You don't have to even wait for this one to drop. That's notyouraverageFinancialPodcast.com.
Perfect. Thanks, Mark. And again, you can go to capitalgainstaxsolutions.com if you're selling a highly appreciated business, real estate, highly appreciated stock, business practice, and we can help you with your tax deferral needs. Okay, with that being said, thanks so much, and please share, rate, review, and subscribe to the podcast. We so appreciate